In this lesson, we'll be discussing the Fibonacci Indicator, a very useful tool for identifying retracement levels in uptrends. So some of the things we'll be covering in this lesson include the Fibonacci number sequence and what it's all about, how to apply the Fibonacci retracement indicator to your charts, how to interpret the trading patterns made by the market participants, and using the patterns to identify future potential turning points and reversals. So let's start by going through a little bit of Fibonacci theory. Discovered by Fibonacci himself, a mathematician in the 11th century. It's a sequence of numbers that has a relationship between nature and mathematics. Planets, the moons, stars, tides, sap rings on a tree, they all have mathematical relationships in respect to how they work or grow. So it's found in nature, and as you're about to see, it has an interesting relationship to financial markets. Applying the theory to the share market data has produced some astounding results showing investor behavior patterns. So in terms of Fibonacci levels to look for with financial markets, prices on a chart will tend to move in a wave-like pattern. And we can use this indicator to identify possible levels of support and or resistance, particularly useful with a pullback in an overall uptrend. These reversals or pullbacks commonly occur on the ratios of the numbers in the sequence. So a couple of things here. This is the Fibonacci number series that you've probably heard of. And basically it starts with the number 1. We add 1 and 1 together, we get the next number in the series, which is 2. To get the next one, we just add the last number and the current number. So 1 and 2 is added together, we get the next number in the series now, which is 3, and so on. So to get the next number, we add 2 and 3 together. That gives us the next number, being 5, and that's how this number series just grows and expands in this way. Now, what's fascinating about this is it's found everywhere in nature in many instances. So here is 2 examples of a pine cone, and it's showing you the spirals within the pine cone shell itself. And this one over here has 13 spirals, which is being obviously a Fibonacci number. Pine cone over here on the left has 8 spirals, again, a Fibonacci number. So this is not just a coincidence. There are many, many examples of how nature will use these Fibonacci number sequence of numbers or levels, if you like, when growing in nature. So the numbers for the progression and regression start with 1 and 1 giving us 2, 1 and 2 giving you 3, 2 and 3 gives you 5, and this is again how the number will progress or expand outwards. So each new higher number is the sum of the 2 prior numbers. Now you can also do the same thing in reverse. So if you're going backwards into smaller numbers, you get 21, subtract 13, and you get 8. If we subtract 8 from 13, we would get 5, and so on. So this number series can be very useful when choosing a time frame for an indicator. So most of the time I'm using an indicator, I'm thinking of a time frame to use, I'll typically pick one of these Fibonacci numbers like 13 or 21, 34, etc. And that's how I typically pick a time frame for an indicator. It also makes the process of choosing that time frame more mechanical. Now, the other thing that happens with the Fibonacci number sequence is there's 2 other numbers that emerge from that sequence, which are also very well known and used heavily in trading circles. And they are 1.618 and the other one being 0.618. So if you were to multiply the current number by 1.618, it gives you the next higher number in the series. And again, it would work in reverse. If you multiply the current number by 0.618, it would give you the previous number in the series. So if we were to multiply 55, being one of the Fibonacci numbers, by 1.618, it gives us the next higher number up, being 89. Whereas if you multiplied 55 by 0.618, we get the next lower number down from 55, which is 34. Okay, so this is where you'll find the Fibonacci drawing tool. So firstly, go up to the top of the program where the chart is, the top of the chart. Left click on drawing. Under the stock code, you'll see the word select there. Left click on select, and this gives you this drop down here that appears. And over here on the right, you'll see Fibonacci. So just simply left clicking on Fibonacci allows you to start drawing these Fibonacci levels on the chart. So what it's doing is identifying price zones where the price may reverse, showing possible support and or resistance levels. Probably its main feature is a support level for a pullback or retracement you're trying to buy in on as part of an overall uptrending stock. So it can be used to identify possible retracement levels as well as profit target levels. Apart from the 1.618% and 0.618% levels, 50% is another very commonly used level as a retracement zone. So if we look at this overall uptrend, this is obviously the Fibonacci retracement indicator. So we find a range that's occurred in an upward direction like this. We left click on the low and we stretch right up to the highest point of the rally. Left clicking there. You can see over here on the right hand side of the indicator, it's giving us these levels: 61.8%, 50%, 38.2%. So these are probably your most common retracement zones in an uptrending stock. Will tend to pull back into this zone anywhere from 38.2 down to 61.8%, and they represent potential support for a retracement, where it may find support there and actually rally upwards from this level. So it's a very useful tool to look at and study retracements with. We actually have a pre-alert that does something very similar to this and pops up with an R at the bottom of the chart. It's called the retracement indicator, and actually measures retracements from 40 down to 60%, which is basically covering this retracement zone here we're talking about. So just by having the pre-alert, the retracement indicator on the chart, it'll pop up with an R on your chart and essentially flag most of these pullbacks that have this 38.2 to 61.8% retracement zone, so possible support levels. So it's worth having on your chart, and then you can confirm that with the Fibonacci retracement indicator, which is this here. You can also compare prior moves. It's very common for markets to repeat approximately 100% of their prior range. So it's an example of history repeating. So it's quite amazing how often stocks will rally the same magnitude or distance from trough lows. Not always, but it is an interesting phenomena we do tend to find. So in summary, the indicator will assist you in assessing the potential trading opportunities by identifying possible reversal zones and or support levels as the share price moves through its stages of progression and regression. It's important to establish key support and resistance lines on your chart to assist you with verifying the reversal signals. So with a pullback, in a perfect world, you'd love to see it pulling back to your rising trend line and just generally finding support there. But what if it was also a 61.8% retracement at the same time? You know, there's an example of multiple support levels that suggest key support and a higher chance of a rally from that level. So that is the Fibonacci retracement indicator. So a little exercise for you to do at home: apply the Fibonacci indicator to your charts and identify where reversals, potential Fibonacci support levels might occur. Can you see any examples of that support level tying in with a test of a rising trend line? Also view things in nature where the sequence has applied. So again, quite uncanny how many examples you'll find where things will grow or expand in these Fibonacci ratios, such as those examples down there. Hope you enjoyed our lesson today on the Fibonacci indicator.